The adverse environmental impacts of the computing activity used to mint many of these digital currencies in the first place. Bitcoin consumes more energy than entire countries, and it is projected to consume as much energy as all the data centers in the whole world this year. One Bitcoin transaction, a single purchase, sale, or transfer, uses the same amount of electricity as the typical US household uses in more than a month.
Bitcoin's main layer is described as being very energy consuming. And it is a fact that at its highest in May 2021, the Bitcoin network was using as much energy as what the entire country of Sweden uses. Although this seems like a lot, we need to break down what this energy is, where it comes from, and how this trend is evolving, including where the big miners are transferring to in order to lower their costs and environmental impact. First of all, it is important to understand how a miner business is set up. These miners are businesses, the more important ones today being international companies listed on stock exchanges. Setting up a mining business requires the purchase of hardware, the ASIC computers needed to tap into the Bitcoin network and start mining, as well as real estate to store all of the miners. Wherever miners are around the world, the prices for these two elements will often be similar. Of course, better deals can be negotiated, but given the price of electrical components and supply chain costs, this isn't where miners will often gain an edge over their competition. What matters most to miners is energy. The third factor, and this is the most important one, is the energy that they spend in order to make their mining rigs turn. The prices vary between countries, they vary between region, and they vary on the source of energy that you choose. The cheapest source is right now always renewable energies or nuclear, but nuclear is a bit killed by government. So these companies, by default, they have to direct themselves and push for the development of these more renewable energies because it will cost them cheaper in the long term. Cheap energy can be found from two sources: green energy and wasted energy. The energy we produce is always in excess. We never consume 100% of the energy produced by power plants because it would put communities at risk of having blackouts. In the US, it is estimated that 5 to 6% of the energy produced is lost when it is in transit, which is around 211 terawatt-hours. This amount alone is close to double what Bitcoin was consuming at its all-time high. Nowadays, governments are pushing for the adoption of solar and wind power and decide to crack down on nuclear. Unfortunately, although on paper this sounds positive, there are adverse effects to this. With our current technologies, the energy produced cannot be stocked. Therefore, the energy from solar and wind can only be produced when it is sunny or windy. This makes it very unreliable and requires backup power plants to be present and active on a daily basis to cover for this lack of energy. This really is an adverse effect, because Germany, for example, the biggest adopter of solar and wind in Europe, is now back to producing the same amount of CO2 levels as it was producing 20 years ago. Green policies around the world have stopped the adoption of nuclear power plants and have indirectly forced the world to consume more natural gas than it used to. Natural gas comes with its own set of problems. Just like other energy sources, natural gas is produced more than it is consumed, which leads to flaring. Flaring is simply the excess gas that is extracted that needs to be burned. It is a standard and a necessary habit in the industry. In 2019 alone, it is estimated that 150 billion cubic meters of natural gas was flared in the world. This is the same amount as Japan and Korea imported that same year. All gone, in the air, producing approximately 300 million tons of CO2, the same as the total annual emissions of Italy. In order to lower their cost in energy, miners are directly connecting to these sources of energy that, until now, were inaccessible. Because Bitcoin miners can be placed anywhere in the world without the need of being close to communities, they are already tapping directly into this energy because of the attractive prices they can negotiate with the producers, using energy that would otherwise be flared or would be lost due to transit. They also have access to more distant natural sources of energy that cannot be used by communities. This is the case of hydropower plants, geothermal energy, and even new ideas that are being studied, like getting energy from volcanoes. The more time passes, and the more these businesses grow, the more likely they will transition to these sources of energy in order to increase their profits. Other businesses are working on innovating our energy production to service miners, allowing them to have clean and cheap energy. The long-term positive effects the adoption of Bitcoin could have on our energy production is largely underestimated and even silenced by governments and other mainstream medias. They may use this as an argument, but it is so little if you compare it to what energy is actually used around the world. And if you compare it also to the energy used by our traditional financial services, banks and so on, they use way more energy because each of them need to create their own settlement infrastructure separately, of course, because they don't share this information with anyone, whereas Bitcoin is just one place where all of this happens, right? In an uncontrolled and so on. So it's a little bit of energy consumed for huge impact in terms of financial freedom and freedom in general, actually.